Hello and welcome to Crypto Weeklies. Today in this video, let's talk about Avalanche and its token Avax, conduct machine learning based price analysis, tokenomics analysis, regression analysis, and accumulation strategy. None of the content is financial advice. The chart that you're the website that you're seeing on the screen is cryptoweeklies.com. It has all the information for the discussion that we're going to do on Avax today under this area where first with the machine learning based price forecast. We'll start with that. This is the weekly price of Avax starting early 2020 and going to this coin market cap based ranking is ranked number 12th by rank, and in terms of tokenomics, it's one of the cryptos with more than 55% of max supply in circulation at around 400 million AVAX currently in circulation. Total supply at around 450 million. Over the last 1 year or so, if we go and check the price versus market cap analysis, mostly essentially the same. That means whatever growth is accumulated in the market cap gets reflected back in price. Back in early 2024, the market cap did go above 22 billion. Right now it's under slightly over 10 billion. Fully diluted market cap at around 19 billion. That is because again about 55% of tokens are in circulation. To analyze the price momentum over the last 7 days, it has been down like most of the cryptos. Over the last 24 hours, down by about 1%. If we check on machine learning based price analysis, right now the price was at around $26.60 per the model. There are three scenarios. The base case is in pink, the bull case is in yellow, the bear case is in green. The base case is between $26 and $32 between now and March of 2025, middle of March of 2025, and the bull case is between $32 all the way to about $82, and during the same time frame, and the bear case is between $10 and $24. The purpose of these forecasts is to have a realistic outlook on what are the expected scenarios this is again one standard deviation. If the market exhibits mania phase, then the bull case would be at around $197, but now we are playing it within this one standard deviation boundaries, where we are not witnessing any panic or any mania phase in the market. But as and when we witness that, the corresponding forecasts will be made available. Again, these models are trained every single day on the latest price action to be incorporated in the forecasts, and in a tabular format they are available on the bottom of the screen. The base case is in this middle column over here. To its left is the one standard deviation bear case, to its right is the one standard deviation bull case. As we discussed, the one standard deviation bull case till $82, the base case still about $32, and the bear case between $10 and $24 till middle of 2025 March. And now going back to the regression based analysis for Avax, again you can see this polynomial regression function wrapped around the weekly price action in white. There are three bands to the upside, the three standard deviation. The fair value is this pink line, and on the bottom are again three standard deviation bottom. Let's get rid of the three standard deviation and two standard deviation. Right now the market is trading within the one standard deviation regression scope. The one standard deviation bottom on the regression is coming in at around $20, the fair value at around $33, and the ceiling at around $56. The last time Avax went to $56-$58, that was corresponded close to the two standard deviation ceiling. At that time the two standard deviation ceiling was $70. Now it's close to the one standard deviation ceiling. That is because these regression bands have an upward slope in the bull market and downward slope in the bear market. To analyze if the bottom is near, if the valuation is making sense. So the best time to accumulate was around this one standard deviation bottom at around $10 back in the bear market, as well as in 2024 again at around $20. Again that corresponded to close to the one standard deviation bottom. The two standard deviation ceiling at this point is at around $95, which is confluent with the machine learning based price forecast at around $82 close to that range. So if we were to check the regression, now that we have checked the regression, the accumulation based models, we have these models and also a risk based target for AVAX on our estimated bull case targets. We'll start with the models individually. The SMA model says at around 0.37 risk. That means not too high as not too close to the top, nor close to the bottom. Again, this bottom for this model is early in the bear market. Again, when the distance between the price and the 20-week moving average is the highest during the initial drop of the bear market. Again, the purpose is not of this model is not to identify the actual bottom, but check if the price is trading at a very low valuation for any mean reversion trade. This is the DCA model, or the polynomial regression based valuation model. For this model, the risk levels are between 0.1 and 0.2. Again, slightly higher than 0.2, but again in the same band. For this risk analysis, the second best time to DCA Avax. The bottom was identified over here when the price was sub $10. Right now, the lowest that we went in August of 2024 was 0.14 risk, and this is the opposite of risk is reward. So when the risks are low, the reward are potentially high, and when the risks are high, and you get the other vice versa. So right now, in terms of the last but not the least, is the time weighted average price model. This is providing essentially a zero risk score for AVAX, because the price is trading below the time weighted average price. And historically speaking, this is again not the second model that we discussed, the DCA model, was in the business of again identifying bottom, but this is again, instead of identifying the bottom, identifying the range where DCing makes the most makes the most sense. That is whenever the price is sub time weighted average price. This line in sand is at around $31. So whenever for this particular iteration, the $31 makes DCM below $31 makes sense. This is a very long term DCA strategy. Might not work in the same year across multiple years, across multiple market cycles. So this is where we are at in terms of the weekly price action. These are the weekly candles for AVAX, and per the 20-week moving average coming in at around $26, close to the price action. The 100-week coming in at around $23, so price is slightly above it, and 200-week coming at around $32. So price is kind of sandwiched between these 100-week and 200-week. And if we normalize the risk for accumulation, it's coming in at around 0.27. So again, between second and third best time to DCA. In terms of the estimated bull case targets for AVAX, if we check over here, AVAX or per this analysis, Avalanche, if you let's see the latest price at around $27, regression based, as we witnessed the regression based, the DCA model was at around between 0.1 and 0.2, time weighted average price 0 risk, SMA model 0.37 risk. The weighted risk is at around 0.15, heavily weighted towards the DCA model based on the three risks, and per this risk based analysis, the bull case target or the bull run target for AVAX is coming in at around $171. Again, this is not financial advice, this is risk based analysis. It doesn't take into the consideration machine learning models, but simply what could happen in a theoretical bull case ceiling, coming in at around $171 for AVAX. So hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.